Ira Epstein of Linn Associates with your weekend edition of this agriculture update, and this is for Friday the 15th of March 2019. Now the thing to remember on the weekend edition is that we first look at a monthly chart, then they're all weekly charts trying to get a bigger picture of what the market's doing. In terms of events this weekend, the thing I'd be paying attention to is that China bought, it was announced formally today, 28,000 metric tons of pork. They also, it's the People's Conference is ending there, the People's Congress, I guess they call it in China. They did pass a series of laws that are favorable to President Trump, what he wants to get done on intellectual property. With that, pork futures had 5 days in a row up this week, capping out on today at a limit up bid, and you're looking at the grain markets come alive as they are starting to say to themselves, gee, if China's doing that, maybe we're getting closer to what's coming on. The dollar lost a bit on this news as Europe got a bid in some of the other markets, and of course you're all aware, I hope, of what's going on in Brexit. As we look at a monthly area chart of closes, if the bean market could get a boost, and that's the big if, there's resistance on the monthly area chart at 935. When we go to the weekly area chart, and we go to the 1071 high made last March, a year ago, come down to this past July's 810.5, you can see that the market's been hanging right at a 38% retracement. If the market clears that, the 50% retracement area is 940. I mention that because it ties in with the monthly chart of 935 as a resistance point. When we come just on the weekly swing lines, you still have a pattern of lower highs and lower lows. To break that pattern, you'd have to get through 921. We already are looking at a weekly moving average, the 18-week moving average of closes at 902.5, and the 100-week average at 940. This 940 area, 935, 940, obviously is going to be something of a resistance zone. There's just so many numbers at that. When we come to the Bollinger Bands, the first resistance area, if you get there, is the 929 area, and then you've got the 940. So I still see a lot of resistance if the market gets to that point. On the settlement today, the market closed over the 18-week moving average of closes, which puts the bias up, the swing line trend down, the two fight each other, so you have nothing. You can also see that what the Bollinger Bands are doing is suddenly narrowing in quite a bit. In this area right here is becoming a good sideways area in the market. In terms of downside momentum, it has stalled, and you see that in today's area. If we go back to last week, you can see how it was still pushing itself down, and now via the slow stochastics, it's gone into a stall. In the meal market, meal went several times, if you look at it, more than several, hitting the lower Bollinger Band and could not take the market out of this overall sideways band that the markets had in it. Now with the close this week, back up to 310.80 over the 18-week average, and with a pattern now of a lower low and a higher high, what we have is an outside week up. Until this week's lows are taken out, some will say that a trade bottom has been put into place. If you get follow through, then 316.70 is the first resistance zone. That's the upper Bollinger Band, and momentum has turned up. On the crush, for a while we were looking at oil stronger than meal. That has changed, and you see it on the weekly charts. You're still in a downtrend here. Lower highs, lower lows. That is countered by the fact that the market has stayed over the 18-week average, which means the bias is up. My idea on bias, let me explain that also, is that when a market is over an 18-week average of closes on a closing basis, the bias is up. When it's under it, the bias is down. I use that to filter out other technical studies. So right here, while the trend is down, as said by the swing line, the bias is up. The two fight each other. Momentum is pointing down as measured by the slow stochastic. If you fall further, probable supports around 28.93, resistance up at the combination of the upper Bollinger Band, the black line you see here, and the 100-week average. Now, something else that's important. If you'll notice, the Bollinger Band did a fairly good job on rallies. This market kept getting contained by it. And the idea of a Bollinger Band is that it's an algorithm designed to keep the market trading within it 95% of the time. You can go to Investopedia if you want to learn more than that. You can go to our website. We have information on it as well. And a lot of this is in our futures trading kit. So if you go to our website, get that. It's got the technical guide studies in it. You'll learn more about it there. My charting course is probably one of the better spots to learn it, and it's not a plug. I really go into Bollinger Bands in big detail. As you can see, though, the momentum's still pointing down. The corn market, could this be the week that we made our spring lows? That's what I'm thinking. And the reason I'm thinking it is a huge outside week to the upside. Until the market gets back under this low, which tied in, as you can see, with the lower Bollinger Band, the odds favor that somewhere along the line here, you're going to hear too much wet weather, that the corn market, the acreage that the farmer can't get to might go to the soybean market. Be careful. This is very typical at this time of the year. Notice where it rallied back to, and this is the fighting zone. I call the 18-week moving average the line in the sand. On the daily chart, it's the same thing. And notice how the market fought its battle there, and it came roaring back up to it. The trend in this market, well, you've got the swing line down, but the settlement's over the 18-week average. So again, the two are fighting each other. I'll call that neutral, and momentum's trying to come up. I'll be watching this for those spring lows. In the wheat market, a big monster pullback. Now, wheat had been under all this pressure. Notice how it had gone into a vertical drop here, a vertical drop at this point. It broke out right here under what we'll call sideways action in the Bollinger Bands. If the market breaks out and can get under here, the first support could be the 100-week average. You still have the market breaking out to the downside. Here is the power of when you come out of sideways action. Now, you don't know where it's going to bottom other than to say the odds of staying under these Bollinger Bands are 5% of the time. My rule of thumb is that each consecutive week under is one of those 5 percentage points. So to get a big bounce this week is not a surprise to me. In the cocoa market, you strung out to the downside. Try to get out of this sideways action. This is what a failure looks like. Markets will stretch out to the upside or the downside. Basically, you're just staying in a sideways band. In the sugar market, you have a pattern of a higher high, lower low that doesn't want to follow through just yet. Now, you can still say the bias is down because the market did close under the 18-week average. I would say the momentum is down, but the market so far is refusing to trend in the sense of lower highs, lower lows to match both the bias and the momentum. In the coffee market, the overall trend is still one that is lower highs, lower lows. It needs to take out 96.55 in order to negate the downtrend. Momentum still pointing to the downside. And remember, in the slow stochastics on the weekly chart, I don't look at overbought or oversold. I just look at the momentum. Cotton is in an uptrend. You now have the pattern of higher lows, higher highs. You're over the 18-week average, and momentum is picked up, putting in the line the possibility that if the market rallies from here, the 100-week average is the first resistance, and above that, the Bollinger Band top. Support back at the 18-week average of closes, 74.27. In the cattle market, this market, even though the daily chart gets up and down all over the spot, the cleaner play has been off the weekly charts, which remain higher highs, higher lows, bias to the upside, and momentum locked in bullish. In the hog market, this market came roaring as I set up. Now, on this chart, you're in an important area. You've gotten for the first time over the upper Bollinger Band on the 100-week average. On the daily chart, you're 5 days in a row over the upper Bollinger Band, which gives the probability for Monday of the market staying over that band, the way I do my count, it's 0. Now, understand, that does not mean one is going short at the band or buying the bottom here. That is not what it's about. It's about where the pros take money off the table. An event is happening. I'm fully aware of it. You can see it on this chart. The market is trying to come out of an overall sideways pattern, and it's got a piece of fundamental news behind it. It's okay. It still doesn't mean on the daily charts that I'd tell traders to ever buy over a Bollinger top. So when I put this all together and try to come up with this for you, I realize that your hardest thing is, do I do something? And that is where I want to come in. In the mornings, what I do is I make a subscriber video that is dedicated to just that problem. You're looking at your charts, you're wondering like this, should I make a trade, should I not make a trade? What does somebody else think that uses technical indicators? That is where I want to fit in. I review 40 charts and ETFs in the morning. It can take, because I've added ETFs now, about 15 minutes for me to do all that. How you get around it is really simple. Because it's a recording, you can drag and pull and go to the area you want. I cover all the major futures areas, and I'll talk about chart action, what I think the pros are doing. If fundamentals, like I just talked to you about, something changes with China, whatever it might be, I'm going to mention it. And then I'm going to throw out my trade ideas at you on a daily basis. The cost of this, folks, if you can't afford 26 cents a day to see it, I'm sorry, that's what it runs. After that, it's not like I go crazy. I have people that buy it a year at a time for $156. You can decide what you want, but the first thing is, I'd love you to take a look at it to see if you think it makes sense for you. Go to our website. You can call us, of course, but if you go to the website, under Research or Education, Morning Subscriber Video. Take a look. You tell me if you think it's worth its weight. I'm Ira Epstein. You have a great day, and I'll see you Monday.